Alright, hello, welcome. As I go live, we're getting the numbers for initial jobless claims and retail sales. Initial response to the markets is muted. Let's take a look at the numbers. Came in below consensus, but above last time. Export prices are up, import prices are up. But it doesn't matter. Does not matter. This could be the worst possible news in the world, but the market's gonna go, guess what direction? Up. That's the environment we are in right now. Market goes up. I don't remember another time in recent history where this has happened. Usually the market looks forward quite a few years. I think it's blind. It's a blind market right now. I don't know how else to explain it. All right, let's take a look at news news headlines before I get into today. U.S. Trump went to China, made a bunch of deals. I bet you China's now going to put pressure on Iran. Because Trump's going to, the whole reshoring thing, forget about that. Forget about American business. More globalization crap. I don't know, the whole world's in service to the beast of inflation right now. There's a lot of people that say this is the same atmosphere that existed in the dot-com bubble. I wasn't trading then, so I wouldn't know. But even that bubble was not that. Well, let's take a look. Let's take a look at the charts, see how bad it really was. And then I want to talk about bonds for a little bit, and then I'll get to the ES. I used to have a page for this. Let's do a new one. Uh-oh, that's not what I want. Looking at the Spider Weekly. SPY. SPY. I mean, just look at this. This does not seem natural. Does this seem like natural, good business to you? I don't know. We're talking unprecedented. So this was the tariff debacle, and then the recovery from that. And then this is the war debacle. Well, let's go back to what is this? This is a 2008, 2007 housing crisis. Went from 156 down to, I can't see those numbers, down to 67. And if you were buying the whole way down, it would have taken you until 5 years later to have made it all back. Now we have the .com. And we had some really large rises in this. This does not look at all like now. Not even close. There is definitely some hurt along the way. This right here might look like it. So again, we might be years away from a correction. I mean, looking at things historically, it doesn't seem so crazy nowadays. It's just hard for me to come to terms with the idea that, you know, bad business can make, and your stock can still go up. You can be committing almost outright fraud. Well, you're rewarded for fraud. That's kind of the way it is, and you buy a pardon through political support or with money. Yeah, well, anyway, the top was not. Where was it? 320,000. Who knows when it began? But that took, after that crash, imagine that. That took until the next bubble to recover. So really, if you were all in at this point right here, you're just breaking even finally at 2007, you think, thank God, there's no way I'll just take out after 7 years and break even. I'm gonna leave my money in. And then another crash that took till 2012, 2013 to fully recover. And since then, it's been let the good times roll. But this, how many straight weeks? I think that's a record. That's got to be a record of how many straight weeks of green. It's just crazy. All right, moving on. I'm skipping bonds. I don't care. Nobody's watching anyway. Suffice it to say, the bond market's rising. But so is liquidity. Government's still injecting money into, even though they're claiming we're not going to lower rates. Doesn't matter. They're still pumping money in. They're still in QE. There we go. Let's look at the profile. Yesterday's stream, I commented on the pullback due to the news, which was negative. Immediately, almost immediately after the open, was bought up at a seemingly random place. It was a minor support area. From previous days. This would have been a nice trade right here, coming back to bounce off of initial balance high. Would have been a smart move. Again, I am mostly long until something major changes in the macro environment. We didn't stop until we made new highs, seemingly random area. Then the overnight, despite VIX staying somewhat high, we continue to trail higher. We just touched the R1 pivot point and are now slightly trending lower. We spent some time below VWAP in the overnight, but couldn't get enough sellers to take it further down. Couldn't even get it to hit yesterday's close. Would have been a hard thing to trade. I did place one short, one contract short, one micro up here at the top. I figured it's worth a small amount of risk to see if we at least pull back to the POC from here. What I consider the POC is this current range is POC, which, I mean, you might draw this range quite differently. But the way I see it is, if we're still retracing back I add it in until I see a body above and beyond. Then I draw a new range, mostly. So if we do pull back, yeah, I don't know. I'll probably, unless we really start running, I'll probably take profits at previous day's close. It's just too bullish. It's just way too bullish. But the monthly pivot points, they are quite nice to use. Other than that, there's not much else. Other areas that are important are yesterday's high at 74.83. We came back several times to bounce off of it in the overnight. So pay attention to that. We stopped yesterday at this area. What is this blue line? Oops, I forgot to change back to the other chart. So again, previous day's close up here. Previous day's high, rather. We respected that quite a bit in the overnight. Yesterday, we halted for a bit at this area here. I'm trying to figure out what this marker is. I don't remember putting that. Is that current month high? Is that previous day's high? Yeah, it must be. Yeah, that's previous day's high. I hate that it moves around like that. I forget how to change that. There we go. Don't auto scale. Sayer Charts is wonderful software. Until you get comfortable, you will spend most of your day fiddling with it. But if you want to do this long term, I think this or one of the similar softwares is a necessity. TradingView is pretty and all, but limited. Although there are those that say if you can't become profitable, no matter the platform, that you never will. Again, I didn't change the Sayer chart because I wasn't being profitable. I changed to it because I needed more configuration. I needed the C++ environment that they use to make better systems. And another thing, TradingView just continues to evolve in the opposite direction of where it used to go. But this is all unimportant information. So yes, that was just previous day's high. So if we do keep heading down lower, I'd look for a halt around 74.62 and then 74.43. But I'm going to watch right now what happens as we open. I mean, who knows? A few months ago, I would have said we're going to rotate quite a bit from this area. But I don't know. I'm not big on drawing trend lines, but roughly, which that just so happens to put us at the POC right here at 74.19. If we fall that hard. Also the top of value area high of this range, 74.45. That could be an area. I think that's, yeah, that coincides with a previous day high. Not the previous day's high, a previous day high. All right, I think that's all I got for today. Thank you to the massive audience of zero. But again, this is beneficial for me, even if no one ever listens. All right, good luck, goodbye.